Well, I think what is the biggest fear in this market is that the AI trade is going to crack. And Taiwan Semi put a hard stop on that is not what is happening. And I think that really served to reinvigorate the tech stocks, a lot of them, and specifically the semis. Now, in the prior piece, you were talking about Micron, and Micron has taken off. I think it is for a couple of reasons. Firstly, I think Nvidia is now getting some competition from AMD and getting the love. AMD is getting some love from longer term contracts with OpenAI. And then, so we have people looking for where can gains come from if it's not Nvidia. And I think both AMD and Micron might be that answer right now.
And Alexis, coming over to you, you've held semis in your portfolio, as a core position for a long time. With the earnings and the headlines that we're getting, do you still have confidence that AI and automation still has a long runway, even with this rally to the upside that we've seen?
Yeah, well, thanks so much for having me on, Marley. And I think that there definitely is still room to run within the AI trade, and particularly within semiconductors. As Kim said, there's a lot of strong demand globally for semiconductors, and it's only going to continue as the AI race is fueled and we continue to see AI and automation build out progress. That demand's going to keep supporting it. Now, have we come a far way, especially off of the April lows? Absolutely, but this has been a long-term trend. As you pointed out, semiconductors have been a strong part of our portfolio for the majority of the past several years, and we tend to buy SMH on periodic pullbacks, as well as trend them as we did coming off of that strong rebound off the April lows. And we may look to potentially sell some cover calls on our Nvidia position from here, but we still are strong believers in these names. And even with that, semis continue to hold a large part of our tech and equity exposure.
And Kim, coming back to you, I was going through your notes and you say that OpenAI should be renamed to Open Wallet, which did give me a chuckle. Do you think the current pace of this investment is sustainable, or are we overspending in a race for scale right now?
Well, here's the funny thing. It's an open wallet, but the cash isn't coming out. A lot of these are contracts for the future, which I think is smart in many ways, that OpenAI is trying to get these relationships in place. I was a software developer in AI before I became a stock picker in 1999 covering software stocks. So I look at what OpenAI is doing, and I have to tell you, I think their current trend of more data, more processing will fix the models is incorrect. But they are going down that pathway, and all the investors, I don't know what they're thinking, but I think it's fear of missing out driving most of this, buying into what OpenAI has relationships with. But I would have a cautious note on that we don't know that this money actually is going to be spent, and where it's coming from is a real question mark as well.
And Alexis, coming to you, off of that comment here, it's certainly not the first time I've heard that sentiment about the wallet is open, but the money isn't coming out. How realistic is the speed that's been promised in this AI revolution? Can we really execute a lot of these promises that are being made?
Well, I don't have the background of the software developing side, so I'm honestly not sure if we're going to be able to see the promises met exactly as these developers have said. But I think that you'd be hard pressed to bet against them at this point in time. Look at how far things have come just since that 90s boom. And I really do think that with the amount of money being put behind, with a lot of it being deep pockets and smart money off of technology, clearly there is a lot of innovation there. And we've already seen a lot of build out. I mean, look at how much ChatGPT is used all the time now, how much more there's autonomous driving coming out. It feels like in the past several years, there's been a big boom in that technology. And I think we're also seeing it more importantly in a broader AI productivity. Look at Caterpillar, Home Depot, earnings where you wouldn't necessarily think about it being related to AI. Those are really the companies that are benefiting. And I think that's why there's such a big push behind this, is the idea that productivity is going to be able to boost the economy as a whole. And that's where a lot of this demand is being driven from.
Through a new deal, Nvidia will have additional AI infrastructure in Australia. The company is working with Melbourne-based Firmus Technologies on a $2.9 billion project to build renewable energy-powered data centers around the nation. The initiative is called Project Southgate and includes existing construction sites in Tasmania and Melbourne. According to Firmus, the initial facilities would use Nvidia's latest GB300 chips and need about 150 megawatts of power. By April, they should be operational. The deal demonstrates how Nvidia's contribution to the AI revolution is constantly evolving. In addition to producing chips, the corporation is increasingly linked to the infrastructure that enables AI deployment and training. The purchase is also a component of Australia's broader attempt to attract more potent computing investments while reducing energy use. The Melbourne location will be the focus of Project Southgate's first $4.5 billion phase and is meant to serve as the hub for future expansion. According to market analysts, the move might strengthen Nvidia's standing in the Asia-Pacific area, where there is a rapidly increasing need for AI processing capacity. In a CNBC broadcast, Tom Lee, the head of research at Fundstrat, stated that Nvidia's price is still fair. The analyst evaluated the chipmaker's worth in relation to a few other significant businesses. Although I agree that there will eventually be a shakeout, I believe that valuations are actually rather reasonable now compared to 1998 since, that year was the liftoff point before to that last 18-month boom. The best benchmark, in my opinion, is Nvidia, which trades at 26 times forward earnings. At that precise moment, Cisco was 60 times its earnings, while its PE soared at 210 times forwards. Thus, at 26 times, Nvidia is still a good deal in my opinion. Compared to Costco and Walmart, which are about 50 times forward earnings, it is less expensive. Even though both Nvidia and AMD are expected to benefit from years of company growth from AI, Nvidia's superior price makes it the stock to think about buying. However, Nvidia shares are also not inexpensive, so it would be wise to wait for the stock price to drop before making a purchase. AMD may now buy up to 6 gigawatts of processing power thanks to its new cooperation with OpenAI. Additionally, OpenAI and Nvidia have an agreement for 10 gigawatts of processing power. Following the announcement, AMD's stock is significantly more expensive than Nvidia's. The artificial intelligence, AI investment scene has been upended by AMD's agreement with OpenAI. The deal's conditions are special since AMD is essentially giving OpenAI chips in return for AMD shares that vest when specific milestones are met. Nvidia's position as the industry leader in AI computer hardware may be challenged if this turns into a long-term collaboration with one of the front-runners in the AI arms race. Nonetheless, AMD's stock has surged in the days after the announcement and has increased by more than 40% since the start of October when this video was shot. Is AMD still a wise investment after such a rise? Is Nvidia still a better option in this case? Investors need to remember how wonderful of a bargain this is for OpenAI. Broadcom, another leader in AI computing, has signed a contract with OpenAI. Although Nvidia's graphics processing units, GPUs, are beginning to lose ground to Broadcom's special AI accelerator chips, the two companies' deals are very different. In Broadcom's transaction, $10 billion worth of chips are actually being sold, while AMD is selling chips to OpenAI. However, OpenAI also has the chance to purchase AMD at a discount through warrants, which, should the stock do well, would partially offset the cost of the chips. When AMD realizes that OpenAI is using its chips successfully, it may encourage other AI hyperscalers to purchase them as a result of this agreement. Although it appears to be a last-ditch attempt to overtake Nvidia, it remains to be seen if this tactic will enable AMD to rejoin the AI arms race. The agreement that OpenAI and Nvidia made in September is one item that investors are overlooking. The relationship between Nvidia and OpenAI was announced in that agreement, enabling OpenAI to use at least 10 gigawatts of Nvidia processing power. Nvidia will provide up to $100 billion to OpenAI in return. AMD's agreement, for example, is for roughly 6 gigawatts of processing power. These two transactions differ greatly from one another. In order to become an investor in AMD and spur a revival of its AI technologies, AMD is selling its processors to OpenAI. At least Nvidia benefits from the agreement because it is investing in OpenAI in return for its chips. Given that it has all the negotiating power, I believe this tells investors all they need to know about which business is still at the forefront of AI. AMD stock has become extremely costly following its huge increase. It currently trades for around 40 times 2026 profits, compared to less than 30 for Nvidia's shares. The valuation of each firm may be further impacted by the fact that analysts have not yet revised their AMD predictions in light of the transaction. However, it is still a long way off, since the OpenAI arrangement isn't anticipated to see its first sales until the second half of 2026. So, is AMD currently a better investment than Nvidia? Investors should exercise patience, in my opinion. The construction of the first gigawatt of computing power is still a year away. Furthermore, it will take time to determine whether AMD's chips are worth anything in comparison to those made by Nvidia. Many businesses may not be as inclined to flip back and forth like OpenAI because they are experiencing great outcomes with Nvidia technology. At the moment, Nvidia is reporting far better results than AMD, and it still has a number of agreements with startups and AI hyperscalers. Although it's too soon to call AMD the winner of these recent transaction announcements, the company's position is getting better. Although I continue to believe that Nvidia is the finest AI stock available, AMD is definitely worth keeping an eye on if its recent acquisition can result in significant growth. However, I believe that investors can exercise patience and purchase AMD at a far lower price in the coming months, following a huge 40% or more run in the stock price. Taking full advantage of the stock market and investing with confidence are common aspirations for all investors, regardless of age or expertise. The style scores, a special set of rules that assesses companies according to well-known investment methodologies, value, growth, and momentum, make it easier to accomplish those aims. You may use the style scores to determine which stocks are better for your portfolio and which have the potential to outperform the market in the long run. Growth-oriented investors are more concerned with a stock's potential for the future, as well as the general soundness and health of a company's finances, than are value or momentum investors. In order to identify stocks that will experience steady growth over time, they should concentrate on the growth style score, which examines factors including sales, cash flow, and predicted and historical earnings. The creator of the Graphic Processing Unit, or GPU, and a global leader in visual computing technology is Nvidia. As time went on, the company's emphasis shifted from PC graphics to AI-based solutions that today cover gaming, virtual reality, VR, and high-performance computing, HPC. Nvidia has a rank number 2 buy rating and a growth style score and VGM score of B. Wall Street predicts that its top line will improve by 56.9% in 2026, while its bottom line will increase by 48.8% year over year. Over the past 60 days, 15 analysts have raised their profits estimates for fiscal 2026, while the consensus estimate has gone up by 0.2 to $4.45 per share. Additionally, Nvidia has an average 3.6% earnings surprise. Nvidia has a lot of money. The company's cash flow has increased by 87.5%, and in 2026, it is anticipated to post a 140.5% increase. Nvidia ought to be on investors' shortlists due to its strong fundamentals, high growth and VGM style scores, and a favorable rank. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
That HSBC upgraded to a buy from a hold. Now, they have a street high price target now of $320. They raised it from $200. What brought them off the sidelines, like you asked? They see potential for what they call significant earnings upside in fiscal 2027 on the ongoing growth of AI and also on renewed CoWoS allocation momentum for them. Nvidia's what they call aggressive fiscal 2027 CoWoS wafer forecast at TSMC will drive upward revisions to the 2027 and data center revenue estimates, according to the analyst from HSBC. They also believe that potential easing of China GPU uncertainties with the potential of a U.S.-China trade deal down the road could enable Nvidia to see a demand recovery in the Chinese market. HSBC's fiscal 2027 earnings per share estimate is $8.75. That is significantly above the consensus for $6.48, despite not including any revenue from chip exports to China. Now, I want to talk about this new price target, this $320 price target. It's a street high. It implies an upside of nearly 80% from yesterday's close, which was just over the $180 mark. Today, they're trading about $182, up 1.2% right now. But hitting that target, Sam, would translate to a market cap of close to $8 trillion. Right now, they're about $4.3 trillion.
Yes, certainly interesting move there, but adding another bull to the whole long list that we're seeing there. And interesting that it is a street high, so coming off the sidelines in a very big way.
I mean, Nvidia, you look at these charts here, and even without having those upgrades, and we continue to get them, this has been buy the dip. You know, I'm not buying into rallies, I'm buying on dips. And until that trend ends, I've got to go with it. Technically, that is what the charts are telling me to do. So as a trader, I respect that. So based on that, I am buying just a simple call spread. I'm going out of about a month or so, but I'm before earnings. So earnings are later in November. I'm going to use the November 14th expiration, and I'm just going to buy the simple 185-200 call spread. It's about $15 wide, or it is $15 wide. I want to pay $5 or less for that. Typically, I look for a little bit better return on that, and this would be 2-to-1. But since the call that I'm buying is really pretty much at the money, that lowers that a little bit. And again, I mean, this has been buy the dip, and that trend will hold until it doesn't at some point. I mean, that's what happens with technical analysis and trends. But there's really nothing in the way here of this thing going to 200, in my opinion.
What's your steer on the market performance today, particularly in light of the earnings that we've got and what we've been hearing from the big banks and other companies out there, Scott?
I mean, you have to be pretty optimistic, at least from the financials, setting the bar pretty high for the rest of earnings season here. That being said, you know, we haven't seen the market volatility over the last few days that we've seen for about, you know, maybe 2-3 months. And that's all because of obviously tariff news and tweets. And so, you know, we might be back in that kind of arena again, where we have to be cautious of that. But again, just like with Nvidia, until this trend changes, and it will at some point, this is still a buy the dip.